Hello, everybody. This is Tom Randall from GoldenCare. I want to welcome you to this webinar today. It's my pleasure to talk about the Critical Cash product from GTL. This is a great product. I'll tell you what, we're excited about it because it doesn't obviously take the place of long-term care insurance by any stretch, but it does have, as you'll see in the next few minutes, some great opportunities to help folks out in the underwriting side of it. So we have a lot of crossover claims we'll talk about, and the fact that we've got a lot of underwriting conditions that this product can help folks out with. So we're excited about it. I'm going to get rolling. I do have you in presentation mode, so I promise at the end I'll open it up for questions. And I also want to remind you that you will have a handout, that's the word I'm looking for. You'll have a handout for this so you don't have to take copious notes, etc. as we go through. Okay, let's jump into it. My computer plays along here. All right, today's agenda, this is a real nice, quick, short webinar. We talk literally one slide about the carrier. We talk about the product niche. We do talk a little bit about the old versus new because this is a second-generation product from GTL that we helped them design. And then obviously you spend most of the time on the plan details, show you a little bit about how the underwriting is different from what you might be used to. And then we'll just show you the very, very, very simple application, and I'll show you how to calculate rates, etc. And then we'll open it up at the end for Q&A. But that being said, we're excited about this product because of the fact that we know there's a lot of need for it. Whenever you're giving long-term care seminars or you're talking to folks, you know there's a good chance nowadays the underwriting hasn't gotten easier. So it's nice to have these peripheral products to really help out those folks that you couldn't help with traditional long-term care insurance. So when we're looking at GTL in general, it's been fun to work with them. They really are open to some of our suggestions when we went in and helped design this plan with them. They're not a huge company, as you can see on the screen there. They're not like the big LTC carriers that we're used to out there. But you can see they are having some nice growth. From 2013 to 15, they've had growth across the board. Their assets grew by 35%. But again, it's half-billion-dollar company, not these big multi-billion-dollar companies we're used to working with. But that works fine for GTL because of the fact that they are a good established company, 80 years plus in the business, and they have a B++ rating from AM Best. And the good news about it is they really concentrate on these supplemental products, these defined benefit plans, so they're not going to get themselves too far out on the tree limb when it comes to making underwriting decisions, etc., because these plans are really designed, you'll see exactly what the benefits would be at the time of claim. That also being said, I want you to know they have a nice little product line, that Advantage Plus plan. If you need a nice hospital indemnity plan, tell you what, that's one of the best in the countries in my mind. Good, solid plan that GTL has as well. Today we're talking about Critical Cash, though, and I want to give you a bird's eye view here before we get into it. And this basically is a screenshot from a calculator that I'll show you how to get your hands on. I put this calculator together myself, actually, because I liked the way it gave a pretty good visual of what this plan can do for you and your clients. And this plan design that we're seeing here is obviously just one snapshot of all the different choices I'll show you in the next few minutes. But this is one of our most popular plan designs. It's a nice, comprehensive, big $432,000 pot of money that the client has to work with. And if they have one of the critical conditions on the left-hand side of the screen there, you can see that it covers them in a couple different ways. This is a 24-month plan, and it's showing a little bit of prejudice towards the nursing home because it's trying to cover that fear that people have, but it also has $1,000 per month for the home care. And with this plan, we can have a lump sum benefit paid out instead of monthly benefit for the home care. So on that base benefit or that home benefit, if they had a cancer or the stroke that they're worried about or Alzheimer's, etc., you can see on the screen those are paid for 24 months, $24,000 up front. So it's a nice, solid benefit there. And then if during that period they had to go into an assisted living or nursing home, it would pay $2,500 or $5,000 respectively additional money per month to help those folks out. So this is just a quick bird's eye. I'll show you this calculator later on as well, but I wanted you to have a little idea of what it did. And the $432,000 pot allows multiple claims, and we'll talk about that as well. So that being said, why is Critical Cash around? We talked a little bit in the intro about the fact that we know long-term care underwriting hasn't gotten easier, but one of the things that a lot of agents don't realize at first glance is that there really is a really big crossover of claims between critical illness plans in general, which this is a chassis of critical illness plans in general, and long-term care plans. Everybody in our industry is up to their neck in it like we are, knows that Alzheimer's, strokes, and cancer represent 70 cents on the dollar for long-term care claims out there. When you look at critical critical illness plans, we know some of the stats out there. More than 75% of the people who have over the age of 40, I think it is, over the age of 40 are going to have a critical illness at some point in their life. So we know it happens all the time. 1 in 2 men get cancer, 1 in 3 women get cancer. Every 40 seconds somebody in the U.S. is having a stroke. So we know it happens quite a bit. What we also have to look at is critical illness claims. If you look at cancer, heart attack, and strokes, those 3 big ones for critical illness, they account for 80% of all the new critical illness claims out there. And with this plan, as you'll see in a minute, this also covers Alzheimer's, critical cash does. So there's really a big crossover claims when you're looking at critical cash alongside of long-term care. And that's why we designed this plan. We really wanted to solve a couple problems: insurability and affordability. Obviously, the insurability is the big red flag. You're out there talking to people and you know long-term care companies just won't go out that far on a limb. But we wanted to keep this plan affordable as well. So what we did is we took a critical illness chassis plan with GTL and we put a lot of long-term care flavor into it so that we could really help the folks that were out in our wheelhouse. And that's how we came out with, several years ago now, the critical care product from GTL. That was our first generation product. And to be frank with you, we didn't have as much sales as we wanted from that. Some agents really grasped it. Some of them went out and sold it. But the biggest complaint we had was the affordability side of it. They said you conquered the insurability, but with critical care not having a lot of flexibility, we couldn't make it as affordable for enough people. So that's where we came up with the second generation plan, the critical cash plan. And what you're going to see today is that I'll talk a little bit about where it changed from critical care, but the main thing we did with it is made it much more affordable because we made it more flexible, and we'll talk about that today. But what both plans did is conquer that underwriting side. And we actually took I'm not going to read all these out to you because you'll get these slides, but we took a lot of the conditions that with long-term care insurance you might have to run for the hills, where with a policy like this we can get you some coverage, right? All the way from ADL limitations, Social Security disability, some mental disorders, and those types of things that we have to run for the hills a lot of times when you're in a long-term care situation. But this one goes a step further, and this next slide shows even more. With diabetes, over 50 units of insulin, we can't get a full plan, but we can get some type of coverage here with critical cash, where with long-term care insurance, most times you're going to run for the hill there, as we know. Rheumatoid arthritis, cancer, some of those different things that we sometimes can't cover with a traditional long-term care, but with this plan, we have the ability to help more people. So the underwriting side of it's never been an issue from critical care all the way over to the new critical cash, but we know that we hit it on the nose when we started making this product more flexible and more affordable as well. Both the plans did a good job on covering places where really long-term care wouldn't. So if you look at this product, because it's a critical illness product, you have no 2 of 6 ADLs to worry about with that 90-day expectation. There is no elimination period with this plan. This is the first day coverage plan when you hit the triggers. And by and large, it's a diagnosis trigger, so it's a little bit different than what we're used to with long-term care insurance, where you have to show that you're chronically ill. Nice part about this, you know we love cash over here at GoldenCare, so this plan's a 100% cash plan. There's no documentation of expenses to worry about. It's not based on reimbursement or care provider definitions, etc. This plan is very easy. Once you hit the triggers, this plan's going to pay. Okay? So it's a little bit easier at app time, but it also does a little bit better job in certain areas that long-term care wouldn't as well. And again, I want to make sure some of you cynics out there know that I'm not bashing long-term care by any stretch. I have a policy of my own. I know nothing out there in the industry does what a long-term care insurance plan can do. So it certainly isn't saying this plan is better than that, but I am showing you that there are some positives to this plan as well. Things like heart attack, bypass surgery, for example. We don't think at all about long-term care when it comes to those conditions. It's very seldom that you'll hear that because most people are up and at them pretty quickly after a heart attack. If it doesn't kill them, they're up and at them a little quicker, and a bypass surgery is usually pretty quick and painless these days. So these policy or these types of claims are something that this plan would cover where maybe long-term care wouldn't. Okay? So if we go on from there, the approval, we're approved in 36 states right now with this new generation. We are still waiting for Louisiana and Ohio, and that's probably as far as we'll go as far as state approvals. Like, for example, there's certain states that you just know this plan. California, for example, is going to have a problem. New York, some of the usual suspects out east, where you just have a base benefit, for example, I had to have automatically my nursing home benefit be an additional $2,000 in most states, right? So if I had a $1,000 home care, it would give me $1,000 extra for nursing home. If I had a $4,000, it'd give me $4,000 extra nursing home. Assisted living is still always half of what the nursing home is, okay? What we did now is we made it very flexible. You're going to see you can really design these plans to do a lot of good things for you. And because that nursing home part of it obviously has a much smaller premium load on it, because we know if somebody has critical illness, everybody's going to use the base part, the home care part, but some people won't need to go to the nursing home. So obviously that's a much less expensive part of the plan. So by making this more flexible, we can really design more affordable plans that are still doing the job that we need it to do for the clients. And part of that made it more feasible is that we now have a lump sum feature on the home care side. With the old plan, you remember, if we sold you $1,000 monthly home benefit for home care, it paid $1,000 a month for that claim period. It didn't give it the opportunity to have a lump sum. With this one, now it sounds a lot better, doesn't it, when you tell somebody, oh, I put together a nice plan for you at $1,000 a month home care. Instead of saying that, you can say, if something happens, if you have a stroke or whatever the case may be, this will play out a lump sum of $24,000 or $18,000. So it gives you a little bit more punch for it with the same premium cost. Okay? So let's look closer at it. Again, I'll open it up at the end for questions. If this is the first time you've ever seen this plan, obviously there's a lot of stuff we're going through in a short period of time. Excuse me. Let's look at it. We have the same three plan designs that we had before. And most people go for Plan A. They want the comprehensive plan that you can see on your screen covers cancer on the top there. In the middle section, it covers the stroke and heart attack. And down at the bottom, we call those our base or foundational benefits. Alzheimer's is a huge part of it. A lot of critical illness plans out there don't have Alzheimer's covered, so it's important that we have that in all three of these plans. Most people try for Plan A, and you see in a few minutes when I show you the application, it steers you right towards the other plans based on the answer to the 4 health questions that are on the app. If you have some problems with stroke or heart attack in your past, it'll say, you know what, we can't sell you Plan A, and unfortunately we can't cover your stroke or heart attack, but we can get your Plan B, the Cancer Care Plus plan. It'll still cover that cancer you're worried about. It'll still cover the Alzheimer's and the other foundational or base benefits you see on the screen there. Okay? You guys are a sharp group. You know if somebody has some cancer issues in their past, the app will steer you and say, hey, we can't cover the cancer, but we can still cover that stroke you're worried about, and we'll always cover that Alzheimer's as well, and the other benefits you see on your screen. So nice way to do that, and you'll see again the app steers you right in that direction. So basically after you figure out what plan you're going to be with, then you choose your benefit period. And there's 4 options in most states, 6, 12, 18, or 24 months. Okay? And just to keep this thing affordable, there's no smoking gun or anything, but basically to keep it affordable for more people and keep logic in check, the benefit period for cancer in situ, which is just cancer in the same layer of tissue that it was first found in, it's not going to metastasize anywhere. In almost all cases, the doctor can go in and easily take care of it, usually in one stop. Okay, so it's not going to be a huge, some people call it cancer light. For cancer in situ, heart attack, and coma, they will pay for 3 months of care regardless of what benefit period you choose. So again, they know that if you're going to have a heart attack, you're usually up and at it pretty quickly, so it is only going to pay for 3 months instead of 6, 12, 18, or 24. Same thing with bypass surgery. We all know people have had that. They're usually up and at it real quickly. For bypass surgery, it doesn't pay for the full benefit period. It just pays for 2 months. Besides that, any of the big conditions people buy this policy for, stroke, cancer, Alzheimer's, it obviously covers it for the full benefit period you chose. Okay? Now we know our benefit period. The next thing we're going to do is look at our monthly base amount. This is the home care amount, if you will. And with this new plan, you can choose benefits from $500 all the way up to $5,500 in $250 increments. Okay, so very simple. Most people choose the 1, 2, 3, 4, or 5 you see up there, but you do have flexibility all the way in $250 increments. Then, not at the time of application, but at the time of claim, your client can choose whether they want those home care benefits paid out like the old way with critical care. They can have it paid out per month. For example, if I sold you a $2,000 base amount or home care amount. It could pay me $2,000 a month for 24 months if I chose a 24-month plan. Or I could get a $48,000 lump sum payment at claim time. Totally up to me as the policy holder. Okay? Don't have to decide at the time of app, though, just at the time of claim. Then the monthly facility benefits. Now, this is where we really deviated a lot, like I told you earlier, from our initial plan, the critical care plan. Critical cash says, with the facility benefits, you can also choose nursing home benefits from $500 to $5,500 in $250 increments. The only thing you have to worry about is that your total monthly benefits, meaning your home care plus your nursing home, have to be $6,000 or less in most states, okay? So if, for example, and this is right out of the brochure, the monthly base benefit's $2,000, then the nursing home monthly benefit could be $4,000 or below. I couldn't go above that or I'd be above my $6,000. Obviously, all the calculators in the illustration software is going to go ahead and stop you in your tracks and let you know you can't put together that type of design if you're above 6,000. Okay, very simple. Restoration of benefits, this is just to show you that a lot of critical illness plans out there, right now in America, it's huge overseas, by the way. One of the biggest markets overseas is critical illness plans. But in America, we have a lot of critical illness plans out there, and it's one of the fastest growing segments. But a lot of them are workplace plans where an employer pays or has a voluntary pay at work, and you get a nice little CI plan that says if you have a heart attack or something, it'll pay once. And once it pays, the policy's dead, okay? Or it'll say once you get to age 55, 60, or 65, or 70, whatever it may be, then the policy's going to go away. Or the policy will limit your benefits drastically, okay? This plan's different. This plan says we want it as a true end-of-life plan. So part of that is what we call the restoration of benefits. It says you can have multiple claims. I could have a stroke, and then later on I could get cancer, or vice versa, or whatever the case may be. I could have multiple strokes. The big caveat here is don't take off your long-term care hat if you're in the long-term care industry. It's not putting money back into the plan. It basically just says you can have multiple claims. So your big pool of money always stays the same and goes down as you use it, and you can have multiple claims as long as they won't start paying until 12 months after the last time they paid the last benefit from the previous critical illness. Okay? That was a mouthful, but it's very simple to understand. Multiple claims are available as long as the benefits are separated by 12 months. Calculate the maximum benefits, very simple. All the illustration tools I'll show you will do this for you. But basically, if I had the example of a 24-month plan, $1,000 home care or base benefit, and $5,000 nursing home benefit, all I have to do, and again, the illustration software does it for you, add up the two amounts, 1,000 plus 5,000 in this case is 6,000. This is one of our most popular plan designs, by the way. And then take 6,000 by 24 months, and you get $144,000. Then you multiply that by the arbitrary number 3. The reason I say arbitrary number is one question agents used to keep coming back with us saying, I get everything until you get to the 3. Where did you get the 3 from? The 3 is just a number we put together with the actuaries over at GTL so that we could give a nice solid pot of money. We could allow for 3 solid full claims if we needed to. And that's how we came up with the arbitrary number 3. Keep it affordable, but also give some power to the plan. Okay? That being said, we'll look now at the only optional benefit available in the critical cash plan, and that's the optional return of premium benefit. And basically what this is a little bit different what we're used to with long-term care. If you're in the LTC arena, you know that return of premium is pretty expensive. With this one, it's only a 10 to 25% premium load, depending on your age. And there is a caveat, though. It'll return your premiums that you paid, less any claims, but you have to die before the first policy anniversary following your 80th birthday. Okay, so I look at this return of premium. It's relatively inexpensive. Some agents sell it all the time. I don't think it's a deal killer or deal maker either way, so it's up to you as an agent. If you want to push it, you certainly can have it, but remember there is that caveat that they have to die a little bit younger. Okay? This slide just basically sums up what we know. We love cash. First day cash means no surprises at claim time. So it's just reminding you that there's no elimination periods to worry about. It does pay regardless of other insurance out there, and you don't have to keep receipts. We talked about the fact that there's multiple claim potentials. One of the big ones I want to make sure for you long-term care agents is take off that LTC hat again, and remember that this policy is a little bit different. This is the diagnosis trigger. So basically what it says is, if for example, a stroke is one, we all know somebody who's had a stroke, and sometimes people, it knocks them on their butt, but sometimes people are up and at it pretty quickly. So let's say you have somebody who has a stroke and they bought a 24-month plan. This policy, even if that guy's up playing golf again 3 months later, this plan still says he bought a 24-month policy, so we're going to pay the full 24 months, even if he's back at it and feeling good. Unlike long-term care, right? Same thing on the flip side. If that stroke really knocks him on his butt and he ends up kicking the bucket, if he ends up dying, then this policy says, hey, we promised to pay 24 months. We're still going to pay the full 24 months. They're not going to pay it out in a monthly benefit, but they will pay the lump sum for the full 24 months, even if somebody passes away. So you can see that gives a nice little difference from what we had with long-term care insurance as well. It is guaranteed renewable like you're used to. And right inside the brochure, you'll see this example. Good old Bob's out there, and he bought a policy, bought a nice one, $1,000 a month base plan with a $5,000 facility benefit, and he bought an 18-month plan, okay? So Bob's feeling pretty good. He has his policy in place, and he waits at least 30 days, because that's the only caveat. You got a 30-day wait there. And then after 30 days, some point down the line, Bob has a stroke. And this stroke was kind of a weird one. He could stay at home for 3 months, but then he had to go into a nursing home because it got too much for his family, and he finally had to go into the nursing home. So the way this policy pays out is, for that first 3 months of care, it says, hey, Bob, you bought a policy that covers 18 months for home care. We can pay $1,000 a month for 18 months, or if you're like most people, you'll just take the check for 18 grand in a lump sum and use that money to help your kids take time off work or whatever the case may be. So Bob took the $18,000 check, and then the next 15 months when he went into the nursing home, the policy said, hey, we sold you $5,000 additional coverage if you went to a nursing home. So what it'll do is give Bob $5,000 additional coverage each month for those 15 remaining months that he's in the nursing home. So in that case, he got 75 grand additional for that nursing home payment. So just that one claim, Bob ended up with his critical cash policy paying out $93,000. And remember, it's not one and done. Bob has the opportunity that if he wants to have some unlucky business going on, he could have another claim because he still has money left in his plan. So nice little opportunity there. You can see the power of the plan. If we look at the application, don't worry, we used to do full-time training for our long-term care apps because there's a lot of questions. This is a very simple one-page application when it comes to the health. Simple 5-question yes or no. We're sitting actually right now at over 90% issue rate. And the nice part about this, there's no APSs to worry about. There's no telephone interview. They do a pharmacy check, and I want to make sure you know that part of it with the MIB is there too. But the pharmacy check's the biggie. So when we get to the prescription drug, I tell agents, do your due diligence. Get out that shoebox and make sure you list all of their meds so there's no surprises. Okay? Question 1. First thing is the big knockout question. This is a total knockout. In the last 10 years, have you had any of those major conditions on the screen? I'm not going to read them to you because you get these slides, but you can see there a little bit like what we see with long-term care, but this is much less tedious. There's not some of the conditions that would be on a long-term care app that you won't see here. But we're throwing the net pretty wide here. We're going to have to walk away from some people, but not that many. Okay? Next question, in the last 5 years, have you had any problems with drug or alcohol abuse? Okay? Again, throwing the net pretty wide. Or are you currently confined to an assisted living or a nursing home? So obviously we're throwing the net pretty wide there, not knocking out a lot of additional people there. Then we go to question 3, which I call the fraud question. It basically is protecting the company a little bit. And it says, for any of the conditions that you're applying for in the last 2 years, has anybody who wants to be insured had any abnormal diagnostic test results? Are they awaiting any test results? Or have they been advised to have a test that they haven't done yet? Or do they have a medical condition, symptom, or abnormality that would have caused an ordinary prudent person to seek medical treatment or advice, but they hadn't done so? Okay, so basically that's just a wide inside there, you're going to see that it says if you answer yes to 1, 2, or 3, guess what? Don't submit the app. And this is right on the application, so it makes it very simple for you, the agent. Question 4 is a partial knockout question, and basically what it says is, in the last 10 years, have you had any problems with Part A, any of those cancer conditions? If you have, then you'll see on the app right below, it'll say, guess what? If you answered yes to 4A, it just means you can't have cancer coverage. Same thing with 4B. 4B says in the last 10 years, have you had any problems with any of these stroke or heart issues? And if you answer yes to that one, doesn't mean we got to run for the door. It just means we can't offer the cardiac care. We might be able to offer the cancer care. So very simple. And again, right at the bottom of the app, it shows you that. There's question 4A. If you say yes, it says, guess what? Cancer care can't be covered. Same thing with 4B. If you answer yes to 4B, we can't do the cardiac care. They even go so far on the far right there to say, hey, guess what? If you answered yes to both of those, we ran out of plans. We can't offer any coverage. Don't submit the app. That's how easy that is. There's that prescription drug. We wanted to keep this down to one page, so some of us, with our wheelhouse here in long-term care, when they pull out the medicine box of their meds, you're going to have to attach a separate sign sheet. Okay? We wanted to keep it down to one page, though, so we don't give you tons and tons of room on the prescription side. All right, excuse me. Next thing we're looking at is rates, and what I'm going to do here is remind you that you're going to get this little rate chart, and it's going to show you on the slides how to go in and calculate rates. It's a very, very simple thing to do. But instead of showing you that today on this webinar, I just want to show you that tool that I talked about. I do have an Excel spreadsheet that's available to you, and you'll see how to get that when you get your email here as a follow-up email on this webinar. But basically, it's a very, very simple. If you have Excel and you know at all how to work a computer, it's going to be real easy for you to do. And this is the input page, and once I do my input, I'll be able to go over to this page and show exactly what I offered my clients, okay? Basically, it's a drop-down. I just click on which month, or excuse me, which state I want. I could type in my client's name here. Instead of putting valued client, I could type it in. I put in their age using the drop-down. And whether they use tobacco, yes or no, is a drop-down. There's my plan A, B, or C. Very simple stuff, right? Here's my amounts that I can have for my monthly base amount. And once I do that, I can put in my amounts for the monthly facility amount, okay? Nice intuitive software. If I try to overshoot something, and let's say I do this, it'll turn red and say, hey, you can only go up to $6,000. So it's going to show you that you did something wrong. So I tried to make it so it was pretty easy to understand. If I go back to 1005, this is our popular plan design I told you about. 24 months, I could also choose the lesser amount, 6, 12, 18, or 24. All I want you to see on this page, if I want a spouse, I can go in here and click yes, and the spouse will pop up over here, and I can put in a total different plan design if I want. Okay, you're not tied to one plan design. And then if you look up here, premium at a glance, it'll show you really quickly just a bird's eye view for you, the agent, where your premium's at. But then when I go over to click one, it'll show my bucket, it'll show exactly what it pays, and here's my premium over here. And it's all set up to print on a nice one page, so even if you don't have a color printer, it'll still look good in black and white. If I click to insured, you can see it'll show two buckets because I can have different plan designs, and it'll show mom or dads up here, or moms, whoever your first insured is, and the other insured down here, and a total premium over here on the right. Very simple stuff, very easy to use. So I just wanted to make sure you knew that was available. Okay? Now I'm going to go back here, and I know we're getting close to our half-hour amount. I'm probably right there right now. Yep. I'm going to go real quick and just show you a couple other things in the rate book. Not only do you have the plan designs we talked about, but you have some meds on there. You have a worksheet if you want to do it the old-fashioned way and you don't want to use the Excel calculator or the calculator available from GTL on their website. We have a height and weight chart that we do use with critical cash. It's very liberal. You can see there a 6-footer can be up to 295 pounds for a man. So it's much more liberal than what we see with long-term care. And finally, before I open it up for questions, I just want to show you real quick. This is what I meant by the flexibility with this new plan. And I'm going to go from the current slide so you can see it better. Basically, if you wanted to have the plan design like we had on the old critical care plan, it would be $2,000 base amount, or 3 or 4, whatever I chose, and then it has to have a matching nursing home amount. And basically, the max it went up to was $3,000. monthly potential for a 65 to 69-year-old for a 24-month plan, I could design it just like we had with critical care with this new plan and do $2,000 base, $2,000 nursing home to back it up, and it would be $3,000 premium. Okay? But now with the flexibility, I can do a $3,000 base if I wanted to show more prejudice towards the home care, and the $1,000 nursing home, the same $4,000 overall benefit, and the premium would go up, right? Because the base benefit is where most of the premium load is, because that's the one that everybody who has the diagnosis is going to use. What we wanted to show you down here is that with this plan now, the way it's set up, you could do a $1,000 base amount and $3,000 nursing home. So now the same $4,000 potential benefit for only $1,770 because the nursing home benefit has a much smaller premium load. And remember now with the lump sum available with this new plan design, now you talk to people, instead of saying a $1,000 base amount, you'd say, if something happened, you had a stroke or cancer that you're worried about or Alzheimer's, you'd get a check for $24,000 right off the bat for your home care. So you'd have the ability to help your kids or whatever save that money. I could go so far as to have extreme prejudice and do $500 for the home care or base amount, $5,500 for the nursing home amount. So now instead of $4,000 overall benefit potential, I'm up to $6,000. Guess what? The premium would only be $1,244. So just want to make sure you agents know there's extreme prejudice for logical reasons towards the nursing home being very, very inexpensive. And because we can pay out a lump sum benefit, it makes it much more affordable for a lot of people. Okay? There's some other slides in here that I'm not going to go through because of time, but those other slides you'll get with your handout when they email it to you, and it has some other sales ideas for critical cash that I think you might like. So that being said, I'm going to open it up for questions real quick. I do want to let you know that, number one, thank you very much for spending some time with me this afternoon. I know some people jump off before the question side, but I do want you to know, call us at GoldenCare. Take the next step, 800-842-7799. Go to our website that you see on your screen, www.goldencareagent.com. Nothing happens until you take the first step. As an agent, that is your responsibility. We just don't have enough recruiters here who can hound you enough to make sure you do this. You got to take the initiative, get appointed, and go out there and start helping more people. Because with a plan like this, a lot of those folks you had to walk away from with long-term care insurance, you have the ability now to give them some coverage. So we're excited about that possibility. But I do want you to know that we are here for you at GoldenCare. We got a great team who can help you out, show you how to design plans, show you to use that calculator, whatever you need. We're here to help you, okay? So unless anybody yells at me last minute here. All righty. This is Tom Randall. I want to thank you all for jumping on today. And again,